All right, my beautiful friends, it is Wednesday, May 26, 2021, and this is what's happening right now, at least pre-market. Pay attention to what's coming out of the mouths of Federal Reserve officials. They are being paraded out in a big way, trying to talk down inflation fears, desperately trying to convince people that what they are seeing is not real. Or if they're feeling the pinch, don't worry about it. It's going to mysteriously just go away. That sincerely is the common narrative right now. But again, it's all part of the game. It's all part of the charade here. The dollar index, or the Dixie, remains firmly below 90. I've been explaining to you since the longest time. This trend will continue. The dollar weakness that we are seeing now, obviously, is being reflected in higher prices across the board. And this, people, regardless of what's coming out of the mouths of Federal Reserve presidents. I mean, look, whenever a Federal Reserve president comes out and tries to convince you of something, you know the polar opposite is true. I don't have to tell you that. But the fact is, they are out in force trying to convince everyone that this is okay, don't worry about it, the Fed's got it handled. But what are they doing? They're not changing anything. They're still running their inflation creation machine at full speed, creating artificial demand for the market, pushing cash into risk on assets like stocks by suppressing rates, robbing the middle class, absolutely blind, and no one talks about it. It's a phenomenon that is sincerely out of control. Okay, with that said, you got gold and silver getting bid higher this morning, cryptocurrencies getting bid higher this morning. The 10-year yield is still, in my view, reflective of a little bit of fear. Like I said yesterday, the market wants to believe that this issue regarding inflation is under control, but the market underneath it all realized it's all bullshit. There's no such thing as this being under control, especially when the Fed continues to do the same thing, what they've been doing for years, with no end in sight. Understand, the moment that the Fed decides they're going to taper in any kind of way, the market craters. And I mean craters. The market is massively overvalued. I mean, by 80%. 80, yeah, you heard right. 80%. That might be fair value with regard to the stock market here. And it will overcorrect. Once this market starts to understand the reality of this completely fabricated, fake environment, it is going to crash beyond anyone's wildest dreams. It's going to wipe out the wealth of a vast majority of people that are stuck in this market on the long end, who can't get out, like a 401k plan or something like that. And that wealth is simply going to be transferred right up the food chain to the one percenters. That's how it's going to play out. I think most of you already know that. And this is why you got to set yourself up with regard to holding risk off. Look, whenever there's a risk-on environment throughout history, okay, not just in today's environment, the smart money is looking at risk-off assets, because risk-on becomes risk-off. You understand? And it goes back to our strategy, what I've said since the longest time. Bet against the debt. It's a hyperbubble. Hold hard assets, physical gold, more importantly, physical silver. And yes, I still believe cryptocurrencies as well. Anyway, that's the story right now. So let's set this up real quick. You got stock futures pointing towards a higher open, but we got crude oil under pressure right now, okay? We got the 10-year yield. It's stable, but also under pressure. When the 10-year yield drops a little bit, that means cash is making its way into the debt market. So that presents an issue for the stock market. You understand? Anyway, I think you get it. You got to watch the flow of cash through the markets. Where is it going? And that will tell you what you should be doing. But again, if you're a stacker, if you're someone that holds cryptocurrencies, you're laughing at all this. If you're a trader, someone like myself, it's more challenging. You understand? I think you get that too. But what I'm doing here is trying to at least enlighten all of you as to what you should be paying attention to and what you should be doing right now to take advantage of the situation, setting yourself up for what's coming. Because what is coming, people, is a stock market crash, an economic disaster area like you cannot possibly imagine. This is coming. There's no doubt about it. This fake engineered environment, this hyperbubble in debt, hyperbubble in real estate, distortions across the spectrum of asset classes, this is not sustainable. And it is going to be a horror show when this whole thing does eventually correct to fair value. And that will be, again, not by accident. Not at all. All of this is being set up here. It's a wealth transfer effect. We're in a currency crisis. We've been in a currency crisis right now. You got central banks around the world deliberately debasing their currency, robbing people blind. But then again, you got central bankers trying to convince you that what you're seeing is not real, something I warned would happen. And it's only going to get worse. There's no way out. There's no way out of it. You understand? All this has been set up in advance. We're just seeing the side effects of it right now, or the effect of it right now. And in the end, this is just going to prove to be very, very difficult for people. For some. For most. But for some, they're going to reap the rewards of it. And I just want to keep you on the right side of it. I really, really do. All right, people, that's it. A very important video. Please share it. Get it out there. And I will see all of you at the end of the day for my post-market wrap-up. Looking forward to it.